Hello, everybody. It's Jake Stenziano, host of Jake Gino podcast here with my co-host, the multifamily mentor, the coach, the chef, the father, six, the best-selling author, the G-Daddy, Gino Barbo. Gino, how's it going?
Jake, I am feeling really good this morning. I heard that you got a few joints locked up there. I am doing great.
SC joints opened up, baby. SC joints opened up, both of them. Okay.
So you're doing good. I just was worried about there for a little bit. I know you get into the 40 club right now. You wake up in the morning, you're a little tight. Limber yourself. I'm feeling good. How you doing, brother?
Always making it happen, big man. Today's guest is a multifamily investor, syndicator, and host of Ritter on Real Estate. Nice alliteration there. With a background in management consulting and building businesses, he brings sharp insights into apartment investing, passive income, and financial freedom. So without further ado, Kent Ritter, welcome to the show.
Thanks, guys. Appreciate you having me on. And Jake, now I got to go to the chiropractor, so we'll have to. You have to give me a referral after this.
It's not witchcraft. It's just getting older. It's part of it. If you want to do it in a healthy way, that's all, man.
Well, you finally taught me while my neck is locked up. What's
up, I gotta jump in here for a second, because when I first met Jake probably thought I was the weirdest guy on the planet. I homeschooled. I ate organic foods. We had home births and other various homeopathic natural remedies. And since then, he has come over to the dark side and he says, Gino, I agree with a lot of, not everything, but a lot with what you're doing. You're like a weirdo. I like your brother, Mark. He was the cool guy. You're the guy hanging out in the kitchen, hiding from everybody, like little drool down your face, always grumpy back there. And I thought you were just a weird dude. And now I know, Gino, you were the wise one. You were the one who had all the answers when it comes to a lot of these questions.
Hold on a second. I get one volley back here. So yes, Gino did turn me into an organic hippie. But on the flip side, I got Gino to move south and he started buying guns. So I turned Gino into a redneck. He turned me into a hippie and I turned him into a redneck. So we're fair. All right.
It's a great partnership, right?
We're not the pizza guy and the drug rep anymore. We're the hippie and the redneck. That's even better, brother. I love that. That's our new slogan right there. Thank you. I love that.
So, all right. So Kent, it's been 3-4 years since the last time we spoke, and I know your career's been evolving since then. Just love to hear about the business, today, and about the real estate and how it's evolved, because I'm interested, and I know it's kind of taken a different shape probably since the last time we spoke.
Yeah, it definitely has. And so I think you're right. It's been probably 3 years, which is too long, guys. I miss you guys out there. So great to talk with you. I think over the past, let's say since 23, right, things have changed quite a bit. The environment's changed quite a bit. Markets changed quite a bit. And with that, we've evolved in a couple ways. So we were doing, primarily value add strategies, right? We were buying, C class, B minus class properties and trying to improve those. What happened to all those, right, was cap rates compressed, and it got to a point where you could buy really an A-class property for about the same cap rate you could buy a C-class property. And that didn't make a whole lot of sense. And so a couple places that we changed. And at that time, right, interest rates started going up, inflation started going up. So I'd say we did a little bit of a flight to quality for a while, where we started buying some newer, nicer assets because I felt the pricing was there and it made a lot of sense. We also started building our own, because as we started looking at the pricing to acquire, we said, wow, we can create some really creative partnerships with some of the local municipalities. We create some public-private partnerships. They help us with bonds and put some funds in, and really development made a lot more sense. And so, we started our first construction project. We just delivered our first building, 80 units, back in May of this year. And now we're building 2 more buildings around Indiana. And so we've diversified what we're doing, right? We still love the bread and butter value add, but for a long time that became difficult to find. We started buying some newer, nicer things, some BTR, some townhouses. We bought a 55 and older community, which is fantastic. It performs extremely well. And then we started building our own. And so we've done, a lot of things. And then
you having to serve them like chicken tenders or what? There's no food with the 55 and up. Is that till you get to like 75? What's the cutoff for the food?
No food. But I'll tell you, it's the best resident base, man. They are active. You have an event, they all show up. They're engaged. We just went through a process.
Pickleball?
No pickleball, but that's something we're looking to
Oh,
add.
dude,
You
step
know, you
it
got to have the
up.
pickleball.
Yeah.
So we're actually working on a project. We own the 5 acres next door, and we're going to be expanding into those 5 acres. And I think with that will come pickleball as a must-have these days. But the 55 and older is great. I mean, because they
Most interesting resident story from the 55 and older.
Oh man, there's this one guy who's super classic. We call him the mayor. You know, he's the guy who's just in charge of the property, and he's got an opinion on everything. So we just went through a process where we did a rapid renovation on all of the units, which is, you know, we come in, we renovate, and in about 10 hours we're out of there. So we get in at 8, we're out by 6 that day, and they've got new floors, new countertops, new lights, you know, all this. We even cut the bar top down to make a flat island, so it was pretty extensive. Usually it's when people go to work and they come back and their apartment looks nicer. These folks are all retired, so they literally would just sit out in the driveway in lawn chairs and watch these guys going in and out all day, and like heckle, and you know, you kind of got the peanut gallery right there. So you know, the team is like, oh, I don't know, I don't ever want to do that again on 55 and older. I was like, guys, it was great, we got it done. Look, they're all happy. Like, I mean, what do you mean? We figured it out. But I mean, just folks that, you know, it's like taking care of your grandma, honestly. And so you treat them the right way. You know, they treat you well. They're great to the units. They take care of them. Everybody pays right
Is there a
away. I mean,
cutoff
there's a
in
lot of
age? Is it like
positives.
55 to what? Like when are you too old to live there?
Well, basically, just if you need some services, right? We don't provide any services. We just provide a house, but people move out of there because they need some extra assistance, right? But I would say, while it's, you know, marketed as 55 and older, I think the average age is probably more like 75. And so it's definitely an older crowd, but they're fantastic, and definitely wouldn't shy away from senior, you know, right now with the trends. And I mean, we're here talking about getting older, right? Everybody is, and you know, it's a trend that's going to happen for
A
the next
large
20 years.
population base. It's just sensitivities around it, which you got to be ready to deal with, right?
And a lot of local, at least around here, municipalities are really interested in that type of housing, because a lot of the places around here, their problem is, as people age out and they get out of their big houses and they want to downsize, there's not housing for them to go into, and so they leave the communities. And so that was, you know, that's the case in the community that we're in, and that's why, you know, I think they're going to be really on board for us to expand the
So you're
community, because
saying they
that's
move
their
from like a
problem.
suburb area to more dense areas where they have this type of
Or just to
housing?
a different suburb where that housing exists, but they leave town. You know, they leave town, they lose the resident base, they lose the taxes. And so, you know, a lot of these municipalities, they have to figure out how to get people out of their homes but keep them in town so they can move new people into those homes. Because like, one of the problems we have here, at least in Indiana, especially around Indianapolis, is there's just not enough. I mean, it's nationwide, but there's not enough housing, not enough housing. So like, there's, you know, there's no houses for sale. There's nowhere for anybody to move into. So they got to get people to move out so people can move in.
Mm. Ken, when I met you back in 2019 and you joined the Jake and Gino community, you had a really good life. Beautiful wife,
Yeah,
great
I had
kid.
one back then.
Till I
Thanks,
met till I
Gino.
met you guys.
Yeah, I know. Then I met the Jake and Gino community, and it's all been downhill from there. No, you
No,
guys have been great.
no. The real question I want to say is why multifamily? Because you've really accelerated in the last 6 or 7 years. You went from buying multifamilies to getting into build. You got some build to rents now. You've got some development. I mean that evolution happened so quick. Why did you want to get out of the W-2 corporate grind and get into multifamily?
Yeah, I would say, you know, the easy answer is I wanted to be a good father. And I say that because one of my like core memories is I traveled like 50 weeks a year for work in my last career. And when I have this core memory of like being on the jetway like early in the morning at O'Hare, and like had just had my first baby, and I'm like flying out to, I mean, God knows where, it doesn't matter. And I'm just like, what am I doing? Like, what am I doing right now? I'm leaving my wife and kid at home. I'm flying out and be gone for the week. Like, this is not what I want for my life. And yeah, I was making good money. I was successful relative to other people in my career. Like, I'd done some good things. Even had my own business doing this, but I was still trading time for dollars. And I had to, because, you know, you bill hourly, and I still had to be gone all the time. So the short answer is I wanted to be a dad that was there for my kids and had time freedom to be able to do what I wanted. Right. And That was really what set me down this path. And then you say, well, how do you get there? Right. And I started talking to people that were older and wiser than me. And everybody pointed me to real estate, right? For all the great things about real estate. So, I mean, your listeners know, right? Cash flow, appreciation, tax savings, like all these things. As I started learning about them, I was like, wow, this is a no brainer. And so then it was like, how do you do it? Right. And I, of course, started like many people do with single families and flipping houses with a couple buddies from college. But then I realized quickly, like that wasn't going to get me to where I wanted to be. Like you figure out I got to own like 500 houses to be where I want to be. And you figure out how hard that is to do. So what's the scale? It's multifamily, right? Buy 100 doors at one time versus buying 100 houses, right? The same story you guys taught me 7, 8 years ago now. And that's really what led me into multifamily and into real estate. And
Do
then
you
from
think it's the
there, I just
most
fell in love with it.
duplicatable entrepreneurial venture out there? Like, I don't want to say the easiest, but people need a place to live, right? And so like you can go out there and I know everyone starts restaurants, but they fail like crazy, right? So, I think in my opinion, because I've done it seems to be the most duplicatable entrepreneurial strategy for the average person to enter. Do you think that's fair to say?
I think that's fair to say. I mean, I think once, like, it's not rocket science, right?
Right.
Like, that's one thing I always say
It's
is
not
like,
easy, but
you
like if you're
know,
willing to bust your ass, you can do it, right?
that's right. Like, you don't have to have a PhD to do this. You just have to have common sense. And if you set up systems, which I know you guys are huge on systems, if you set up systems, then you can repeat your systems over and over again, and you can start to scale. Absolutely. And that's been a big piece of our journey and kind of where I left off in my story to now is we brought all of our property management in-house over the last year. And that's really, I know you guys have been doing that for a while, but that's really where you start to think about systems and
What's
growth
the
and how do you
footprint look
scale.
like? Like how big of an area are we talking geographically, and how many units or are you covering with your management team now?
Yeah, units is about 1,000. Geography is basically Indiana, Western Ohio, so Cincinnati and Dayton, and then we have one property in Spartanburg, South Carolina, which is the lone
So,
man down
and
there.
how many units is Spartanburg?
158.
Okay, so if you take Spartanburg out, what is end to end the drive time? Do you think of the portfolio minus Spartanburg?
Like from Indy, it's about 2.5 hour radius
That's not bad.
around Indianapolis.
No,
Yeah.
that's pretty good, right?
Yeah, and our strategy. I mean, one thing has changed. Our strategy has really changed over the past couple of years. Where we started in Indy because that's where I was based, right, and start buying in my backyard. Then, as everybody, you're seeing these trends, and you're saying, "Oh man, everybody's in the Southeast. I think we should be in the Southeast." We started focusing more in the Southeast. I had an acquisition guy who was familiar with the Southeast for a while, but then we saw that the thing that's happened in the past couple of years is really the trends have swung toward the Midwest, and we're seeing rent growth in the Midwest, be top in the country. We're seeing tons of good trends, job creation here, especially in Indiana. And so as we made the decision to bring our property management in house, it was part of this bigger strategic decision to like, don't go try to play in somebody else's backyard, like
Don't do
just
it just because
own
someone
our
else
own
is doing it,
backyard.
right?
Exactly. And like you guys have held firm in Knoxville, right? Like for a long time when other people were in other places,
We're in the
we've
north
really,
southeast.
yeah, you're the north southeast, but we've
Yeah.
done the same thing. We've really brought our geography back to the Midwest and say we're going to focus on building out great management, and we're going to acquire. There's enough good things going on here, and we're going to acquire in the Midwest, and we're really, really going to own our backyard.
Kent, I want to ask you, how has Jake ruined your life other than getting into real estate? What else has he done to ruin your life?
I had no impact on him getting into real estate. Okay.
that was all Gino's fault. That was all Gino's fault.
Well, actually, I
Yeah.
remember the first mastermind we had. I remember you walking Breckenridge with Jake. I remember that. We have a video of it. You two guys walking together, shooting the breeze. And I remember that so vividly because that was our very first mastermind that we had. And it was actually incredible because a lot of those members in that mastermind have gone on to do some incredible things. Maybe it was the timing, maybe it was the quality of I don't know what it was, but I remember you walking it. And I don't think you really had any idea of what you wanted to do because did you want to raise capital? Did you want to go into this part-time? Did you want to buy duplexes? I'm getting emails from Kent saying there's no deals in Indy. 30 minutes later, Kent, here's a 700 unit portfolio for sale in Indy. And I'll never forget that email. And you're like, well, that limiting belief is out the window. You remember that one? And I remember that.
I
So
do. I
what,
do.
what what are the challenges? Talk about some of the other challenges that you had getting into it, because it is excellent that you've been able to scale that quickly, even in such a bad market. The good market was 19, 20, maybe 21, but since 21, it's been a pretty challenging for
Can
a
I
lot of
jump in real
people.
quick? Can I jump in before he answers that? Just
You
real
can
quick.
jump in,
Okay.
brother.
I just realized that I hate most markets. And so if you look from, I kind of like 2018, 2019. I hated 2020 to about 2023. I actually enjoyed 22 and 24, and I kind of hate 25. It's super stagnant. The rates suck, and it's mostly based on, I guess, what we're doing. And it's getting harder to lease, right? You couldn't hire anybody from 2020, and you didn't have an in-house management in 2020 and in 2022, did you? So what we find is that when the real estate market is on fire and it's killing it, it's really hard to hire people, especially if you're self-managing because you're the one doing it, right? But you could lease anything without even showing it. And then the market started to shift in about 23, but the trends were still good. Leasing was easy. Hiring got a little bit better. We're buying more deals over those 2 years. And now all of a sudden, I feel like the brakes have just hit and everyone's just fed up. Like the market is kind of stagnant right now. Hiring is decent, but you're kind of having a harder time leasing. So it's just, I get annoyed and I'm like an angry old man, I think most of the time. But
Well,
I don't know. What's your take on that, Kent?
I think that um, I think that's what's happened, right? If you look at from the great financial crisis, let's say 2010, when people started actually buying things again, to 2022, real estate only went up, right? Prices only went up, cap rates only compressed. I think you had so many groups out there, operators out there that just maybe they weren't great
In
operators
spite of
that
themselves, real
in
estate.
spite of themselves, it was just if it was just the market appreciation that really saved their investment. I think what flipped is interest rates and inflation rose, right? Is if you're still in it now, like you have to be a good operator. Like so many, I mean, Gino, I love to hear the guys from the mastermind back then are like still doing it because so many other people I've met are out of the game now from, you'd be going to conferences back in 2019, 2020. I mean, a lot of those people aren't doing it anymore because I think it got hard. Like it was really easy. It got really hard in
Well, it's the
23
same
and
people that
24.
become a realtor when the market's hot. They're in it for a couple of years to try to, but they're not really in it for the right reasons, right?
Let me jump in real quick to the both of you, because I think the real dynamic in this market right now, there's two things that are going on. It's a lot harder to raise capital, and there aren't that many deals. It's usually you either have a lot of deals and no capital, or you have a ton of capital and no deals.
It's stagnant right now. It really
And
is.
so it's
Yeah.
really, really a weird dynamic right now that if you've been doing this for 20 years, you have your investor base. It may be easier to raise money, but still, they've been burned from other operators. They've had capital calls. They're like, you know what? I don't want to have my money tied up for the next 5 to 7 years because Jake and Gino like this deal. We can't go short term. We got to go longer term. So there's a lot of uncertainty. And then you have sellers who think they've got these beautiful assets. Bro, you got a 1960 with cast iron plumbing and aluminum wiring, and you want a 4 cap. And this is not 2022. So the reality
That's
there is
right.
And
gone.
how are we
And
going
then
to
you
finance this? It's like a 1.1 DSCR, but like you just figure it out,
Yeah.
right? Just go get financing for it, right?
You
so that's
can't.
the problem.
Yeah. No, it is like there's still, and rates have started to come down a little bit, right? We finally got a cut in September, which was great.
Yeah,
But
except for the last week, the damn 10-year popped about 10 basis points. It's
well,
like, come on, dude.
that's the problem is the short term and long term aren't necessarily aren't correlated, right? So yeah, I mean, but you're right. Sellers still want too much because they've been spoiled. Buyers, it's harder to finance, it's harder to raise capital. It's just harder than when any of us started, I think. But it doesn't mean it's not still a great place to be. It's just like I think a lot of people like I look at it as like a look, if you can't do a deal with a 5.5% interest rate, like it's probably not a deal you should be buying anyway. Like that's too thin. It's like anything that goes the wrong way.
Things just aren't
Um,
flowing like they normally. Like it's just slow right now, in my opinion, right?
yeah, and I mean, deal flow was pretty much non-existent in 23, 24, still in 25, and I don't think it opens up until we get the rates to come down because I mean, a lot of people bought properties that were too expensive, right? And so now they're underwater.
If they
So they don't want to
don't,
sell them.
though, at some point there's just going to be this reckoning where people are like, "Okay, I'm tapped out." Yeah, I think people have been holding, and if it goes, I don't know how long it can go. Another 2, 3. I guess it depends on the debt and
Yeah. I mean, the banks
their
keep
operations.
extending, right? They
Yeah.
keep extending people. So they keep, okay, we'll give you a 1 year extension. We'll give you another 1 year extension, And so it's at what point does that stop? I mean, I think what we learned in the great financial crisis, at least, was none of those banks want to take the properties back, which is what they did during the GFC. And then they're like, oh crap, we have all these properties. We don't want them. So they're trying not to take them back and they're just extending. And we are just, it's pretty
You
stagnant.
know what
So
the
like,
worst bumper sticker ever was?
what's that?
Stay alive till 25.
Right?
I go to this one restaurant in town where it's like all the bankers go for lunch, and I heard it just, I'd be walking by and I just hear that getting thrown out so much. Stay alive till 25. Stay alive till 25. I'm like, sweet, I can't wait. And nothing changed. Like, what
Nothing
the
changed.
hell?
I mean, there it's just it's their battle cry to kind of. No, it'll be something else in 26 until it comes
Yeah.
back. I mean, those guys were making so much
Just
money
a
a
bit
couple
till
years ago too,
26,
right?
right?
Yeah.
They were making a lot of money. I mean, that's the reality. Kent, I want to talk about the building. How did you get into development, and how do you even underwrite a deal? Because it's a lot different. Actually, Jake and I like buying developed deals, assets that are newer from builders who don't know how to pre-lease. So how did you even get into that space? How do you evaluate a deal?
And that's definitely a strategy of ours too. We've bought a couple properties out of pre-lease. I mean, I think that's a great strategy right now. I think there's a lot of developers that need to get out of their construction loan. And you're right, they're not usually not good at operations like leasing. And so I do think that's a very good strategy. How did we get into it? We got into it honestly because I owned a 48 unit property and there were 4 acres next door. It was just an open field. And so I found out who the owner was and got a hold of him because I was like, man, if we can turn this 48 into something more, that's going to be a great value add situation. And so it really started organically from there. I kind of just fumbled my way through it. I got some, just like you do with anything, got some mentors, hired a consultant who to take me through kind of the pre-development process and guide me through. And we figured our first one out and it's turned out pretty well.
4 acres?
4 acres. We built 80 units. We built that main street of this little town actually dead ended into the 4 acres because the old guy that owned it never wanted to work with the town to like finish their infrastructure. And so
Met a
the
few of
town,
those, right?
yeah, the town loved that because I mean that was kind of one of the ways we sold it was like, look, we'll build Main Street and we'll dedicate it back to you, right? So we built Main Street down the middle, built 2 long 40 unit buildings down each side, like a Main Street
Sweet.
corridor type thing. Just class
How much
A.
did you pay for the land?
Oh man, how much did I pay for the land? Good question. I think 760. I want to say about
It's
760.
actually pretty good per unit. Cost actually comes down nice. That's actually
Yeah,
nice.
yeah. That was probably 4 years ago now when I bought it.
And
So
it
I
was
pulled
80
that one.
units?
80 units. Yeah, and so
I mean, you're sub
and
10 a door, right?
yeah, but I mean, it was there was a decent amount of infrastructure we had to put in, and so the way that we really made it work, because I mean, right now, just development, if you just try to pencil something out with inflation and rates where they are, like you just can't build anything for a return that like normal investors are going to be interested in. The only way we made it work
And you
was
don't have a warehouse of countertops and shit like that, right? So,
no, I don't.
yeah.
And so we approached the town, with really this partnership idea, right? And what we ended up doing was they gave us a TIF bond, which is called tax increment financing. And so basically, the simple way to say it is, it's kind of like a tax abatement. They're 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 saying, okay, we won't really take the taxes on this property for 25 years. You can take that tax revenue and then you can go sell it. So we went to a family office and we sold that income stream of this future tax revenue to a family office as a bond, right? And then they paid us the present value of that was worth. So, right, okay, this income stream over 25 years, you do a formula for present value. It says, okay, it's worth this much right now. And then we took that money and we put that money into the deal as equity. That equity doesn't have any return expectation. So instead of having to raise like $7 million, we had to raise like $4 million. And so it really improves the returns for the investors that are in there. And I mean, that's really how you make deals work right now. It's how you make them pencil. And like, that's how all of our development deals are, these public private partnerships where like it makes sense for the town because the town knows they need to grow. They know they need density. They know nobody's coming there to build because if you're like,
What's the
we're not
population of the town that you did this in?
like 5,000 people, but it's 15 minutes from like one of the main northern suburbs of Indianapolis. So it's one of these things where Indianapolis is literally just growing around this little town. And so we saw a great opportunity. We had owned there
So
since
it's
21.
sort of captured in the greater MSA of Indianapolis.
It absolutely is. Yeah. I
Yeah.
mean, you can be downtown in 25 minutes.
Sweet. Yeah.
Yeah.
So then, Ken, how do the numbers look though, as far as rents? Do you try to estimate what rents are going to be post construction? You figure out how much it costs you per unit to build.
For sure. Yeah. So you're basically, I mean, the main inputs to your model that like, if you're underwriting a deal that exists, you have historical, like a T12, right? You have your historical rent and operating expenses. Without having that information, you have to make a lot of estimates. And so you really have to have like a track record and history to be able to say, okay, well, we have, similar properties. Here's what we would pay for that. So you gotta build out your kind of pro forma with revenue and OpEx and all that post construction. But the big difference is you got to say, well, what's it going to take to get there? Right. And that's where you have to really be good at estimating costs and building costs. And I didn't know that stuff. And so I hired people and talked to people that did to really get that dialed in. Because I mean, the way that this process works is you're going to go and you're going to you're going to get a site plan. You're going to be an engineer. You're going to get a site plan. You're going to figure out how many units you can put on it. You're going to hire an architect. The architect's going to build a building, show you a design for a building, and then you got to go get those bid out and say, well, okay, what's this going to cost, right? And so, but it's really tough. I mean, you got to kind of be estimating and then turning things into actuals as you go, because I mean, it's really difficult, I think, to wait to the point where you're getting your bids and then trying to turn around and raise money. Like it's just, it's going to really slow down your process. And so you got to be able to really estimate construction costs. You got to throw contingencies in there because you're going to spend more than you think you are, just how every construction project goes. But you just, you gotta, I leaned on people that had been doing this for, their whole career. I had a mentor who's a local developer who'd been doing this for 25 years, and he helped me through the process. He's kind of phone a friend. Then I hired a consultant literally to run my pre-development development process, so it wasn't just
To
me
work with the
trying to
GC and
figure this
everything.
out. Yeah, to work with the GC, but even before that, to work with the town, work with the state, work with all the
Was there
municipalities.
pushback from the town because we've done development, and we'd have these meetings where they send us, and the town shows up and tells us what they want the development to look like, and they yell at us, and the news people are there, and we've gone through that whole charade. This seems like more of a partnership in the sense that it was in the town. Was there still pushback from local folks, or was it more of like, hey, we need this for the town? I'm just
No, there was extreme pushback from the
okay,
local
all right,
folks. I
because
mean,
I was
it
like,
was
this sounds
no,
like a
it was
unicorn to me. I'm like, oh,
it,
tell me about it. Like they want you to do business here. I'm like, this is an interesting phenomenon. I'm like,
well, this town is interesting, right? I talked about how
they all
Indianapolis
are,
is
right?
growing around it. And so it's really it's a small farm town that now is kind of has some trendy restaurants, has some breweries, and like people are showing up there now. And so you've got the older generation who is like, we live here because we don't want to be in Indianapolis. We don't want it to turn into a big city. And then you have like the
Don't
younger
indie my farm
generation.
town.
That's right. And then you have a younger generation who's there because like they see the restaurant. It's kind of like trendy, to be in this town. And so it was really these competing priorities, right? But I think where this town got it right was really their town council president and some of the other council members uh, understood the vision. They understood the need to grow. They knew that they didn't have any diversity in their housing. You wanted a house? Here's a single family home, right? They had some rentals and then they had some apartments, but they hadn't had the last apartment that was built there was in the 90s. So they didn't have anything built in the last 25 years to attract people to come to town. And they knew they needed the tax base, they needed to grow the town. So for that reason, I think the leadership was able to get on board, even with the pitchforks. I mean, they had petitions. They have an extremely active Facebook group. Like, I mean, people showed up in droves. But at the end of the, and I mean, you're just there, and yeah, you're just getting completely just, lambasted, right? They're calling you everything in the book, telling you what a terrible person you are. And I'm just like, look, I mean, we're just trying to, I'm not some giant developer. I'm not some like multinational company. Like, I'm a guy that's just trying to build something high quality, help the town out. Think this is a good opportunity for everybody. They were able to get on board with that. So we won the vote, to get it approved. And what's funny is, it was NIMBYism at its finest,
If the
right? Not
town
in my
wants it, they'll find a
backyard,
way to make it happen. It
because
doesn't matter about the residents. That's the crazy thing in these scenarios, right? If
yeah,
the town
well,
wants it, they'll do it, right?
I mean, here's the thing I said, right? The people that came out were really the people that lived right around it. And I get, like, you don't want a construction project in your backyard. Like, I wouldn't either. Like, I get that. But people would come up and say comments like, look, I know we need more housing here, but like,
Do it
put it
over
somewhere
there.
else. Yeah,
Yeah.
literally put it somewhere else. It's like, come on. Like, Um, so at the end of the day, though, what was cool was some of those people that were the biggest detractors have since, and they were like, oh, this is going to ruin the price of my house and all this. It's like, the thing we're building is extremely nice. The finishes are way nicer. Like, it's going to be higher quality than what exists now. If anything, property values would go up. But now some of them have come over and said, and even some of the town council members that didn't vote for us were like, oh, it's actually pretty nice. We actually like this. It's like, yeah, if you had the foresight, you could have gotten on board on the front end, but on the right side of history. But,
Well, Kent, if they had
now
the
we're here.
foresight, they'd be building it themselves. That's the reality. But they don't have the foresight, and it's interesting with housing. You put up 80 units. It made your other property value, I would assume. So you're able to get some kind of scale there as well. Have you been able to? Have you been able to? Are you holding this property right now, or have you sold the property?
No, we're holding it. We're holding it. And yeah, it was great for the other property as well, because at 48 units with no office, we had remote management. We've been, now we have a manager on site to manage it all. We've got maintenance there. So it's improved the resident experience as well, because they've got an on-site manager, they've got on-site maintenance. That we build amenities out. We build a fitness center that everybody can use. We built out some other things, built out a nice clubhouse. So, it really was a value add for everybody, even the residents of the original property.
That's awesome. Last question before we go to the short answers. You had sort of touched upon bringing management in house. What sparked that debate, or what made you actually take that big action? Because it is massive. There's a lot of things that need to happen, a lot of pain that has to go into that decision. So, what was the final straw? What made you actually say, "Listen,
And
we're taking this bad boy in house"?
yeah, it's like the Tony Robbins quote, right? You're moving away from pain. Like, we were moving away from pain. It just my
To more pain.
to more pain, yeah, to a different headache. I was tired of this headache. I wanted a new headache. But no, honestly, the decision came down to this. It was, you know, if you look at every large operator in multifamily, I mean, they all have in-house management. And so we knew I knew a place I wanted to go eventually. I just thought I would do it when we had 2,500 units or something. But a few things came to happen that we're like, we got to do this. One, honestly, the management across our portfolio with the manager we've had for 3 years had just been deteriorating for about the past really 2 years. And it was just kind of this slow bleed and frustration. And just, I was like, I feel like I'm beating my head against the wall every day, trying to cajole these people,
Powerless.
like, act like they care. Right. And so I was like, if I'm going to be frustrated all the time because of bad management, because I've got the C team, I was like, I'd rather be frustrated in a different way by building a business where I know we're actually improving, instead of just trying to hold, steady. And so that was really, and then we had some great people become available, because there was a firm here in Indy that lost a big account. My asset manager, who had been in property management for 30 years, she knew a lot of these people. She said, hey, a lot of good
Sweet.
people just got laid off and came available. She's like, if we're going to do this, this is the time. We can cherry pick great people. And so I was like, the universe gives you what you need. It doesn't exactly give it to you at the time when you might want it, right? But I looked at this as, okay, this is the time to do it. So we decided to bite the bullet at about 1,000 units, bring it all in house, do a big bang. Because I also know what happens, when you tell a property management company that you're getting rid of them, right? That they just completely disappear. And so I knew we had to do it as a big bang. So July 1st, we took all properties in house. We went from about 7 employees on the investment side to about 35 employees in total. So really grew that out. But I think one really smart thing I did was I brought one of those key people on in January full time, knowing we weren't going live until July. And her only focus for those first 6 months was to just prepare the property management company, policies, procedures, all the things you have to do, build out the HR and that I think that really helped us start on our front foot. But yeah, I mean, definitely the decision was just about moving away from paying just apathetic third party management and just spending money like drunk teenagers with their dad's credit card. I mean, just like, I think that the biggest impact we've had is we've brought down our not both operating and capital expenses. I mean, not lying, like 30% since we've taken over.
And the great thing about it is, before Jake brings us to the timeout, I think this is important. What you're doing is you don't have to go to scale. You don't need to add another 1,000 units by getting your PPU. Now your profit per unit is going to be greater, so you don't need as many doors to profit. So you can grow a lot slower and make a lot more sense of your portfolio. Whereas you're like, hey, I want to get to 2,500 units. Well, why do you want to get to 2,500 units? You don't need to get to 2,500 units to have the same profitability as if you own, I would say, probably 1,500 or 1,800 units if you're controlling that all yourself. It's incredible what you're going to see is going to happen. You're going to see the shift, and there's going to be more selection of deals. You're going to be underwriting for a more select deal. You don't have to have that commish breath, as Jay likes to say, if you're a salesperson, where you got to close deals. You're only going to be focusing on really good deals that are really profitable, that are a lot easier to manage, right? Those are the ones that you want. And so you're going to be more selective, but you're going to become much more profitable, I think, as a result.
Yeah, I mean, I know it's the right move, and we're 3 months in, so we're doing well, and we're still putting, we're going to continue to improve, right? Put processes in place, get everything hardwired, but it's already been better. And again, it's just building out, hiring people who really care. Like one of the coolest things we did, you guys know the Savannah Bananas, right? The baseball team, and they've got,
Oh, yeah.
so it's like, Gino, it's that baseball team. They're like AAA, but they're out there dancing, they're having fun. Like they sell out everywhere they go. I heard a podcast from one of the guys that started that, and he had this great thing about how their interview process, they make everybody do like a 3 to 6 minute video to start the interview process. They can really get to know who people are. So we took some of these concepts into our interview process, and we really, we really believe in our core values. We really drive those home. So like in our interview process, we did a couple things unique. One, the first thing was you had to send us a 3 to 6 minute video. And I mean, and that, it was crazy. That deselected, like people self-selected out probably 80% of people either, oh, I can't figure out how to send a video. It's like, look, if you can't Google on how to send a video, like, I don't care how you send it to me. Like, you're not a problem solver. You're not somebody we want. They also, other people just didn't want to do it. And then our first interview was just like a half hour where we just drilled them on our core values. And you could either see people's faces kind of or light up, and that deselected probably another 10 or 15% of people. So by the time we got to actually interviewing people, we had these people already kind of self-select out. So I feel like we just got a team of all-stars, which was great, versus feeling like I had the B team, and I had to figure out how to make them play like all-stars. Now I feel like we've got all-stars, and we just got to grow. We got to grow the playbook and kind of the team dynamics around them. But I think we got the right people there. And that's what I'm really excited about.
All right, guys, let's take a quick time out to hear from our sponsor.
This episode of the Jake and Gino podcast is brought to you by Wheelbarrow Profits, the premier multifamily education community. Wheelbarrow Profits proof is in their results. Their members have closed over 86,000 units. That's over $5 billion in student deal volume. Are you serious about taking your real estate game to the next level? Do you have the confidence to take action? Schedule a call with the Wheelbarrow Profits team today and supercharge your real estate knowledge. Build lasting relationships through unparalleled networking opportunities. Obtain lasting knowledge on how to buy multifamily real estate with intensive training. Gain hands-on experience through their live events with like-minded individuals and industry professionals, all while experiencing the personal touch and family atmosphere that set them apart. Visit wheelbarrowprofits.com for more information.
All right, we are back. You're going to need some of these maintenance guys to get in the crawl space and buck up and do some things. So how you getting the gritty men, the who's the guy, Mike Rowe or whatever, the dirty jobs guy?
Yeah, dirty jobs.
How you gonna get the men of the men when you're having them send TikTok videos to you, man? That's the only thing that's concerning me here. You gotta get some beef up front here.
They don't got to send a TikTok video. They can
I'm
send
just
however the
I'm
hell they
just busting
want.
your
They can get
chops
on a
here.
Zoom, but it goes back to, look, are you somebody that can solve a problem? Like you might be 65 years old and you've never done it before, but ask your kid how to Google, how to Google to send a YouTube video, or just send me a video from your phone. It doesn't matter, but it's just about, I think there's something about making people take an effort early on to see who's who's interested versus who's committed, right? And like if you're committed, you'll figure out how to do it.
If you want the job, you're going to figure out how to get on your phone. Jake can go ask his daughter and say, "Hey, how do I figure this out?" I mean, like, I don't know how to use use technology. I agree with that concept. They may be harder for maintenance techs, but you know what? If the job market is a lot more softer right now, and people want the job and they want to work, they're going to put that effort in. I agree with.
But here's the thing too. Here's the thing that was important, right? We're leveraging as much technology as we can. So like our maintenance guys have iPads where they're getting their work orders, and like you have to know how to use, like if you can't send a YouTube video or whatever it is, or FaceTime, whatever, then you're not going to be able to use the iPad and get the work orders and fill this out and like use the software in the right way. So, it was important that people have a certain level of like technical aptitude.
It's where it's going too. I'm just thinking of we've had some guys 10 years or whatever in the business, and they can take a jackhammer, bust up a concrete floor and fix a copper pipe that's under that slab that's pinholing. And I'm just questioning from being in it if I'd have those guys right now if I had them send me a YouTube video. I don't know. I'm not hating right now. I'm just questioning, and it's as we built out our teams like that. But but core values are important, right? And so I can't disagree with you there. What's the tree look like? You said you got about 35 folks. What's the hierarchy look like going down in the management company right now?
Yeah, so we have, so I sit over, both companies. So we have Hudson Residential is our management company. Hudson Investing is the investment arm, right? And then we have a woman named Heather, who's the president of our property management company. She's been in property management in Indy for, she probably don't want me to say this. I feel like I'm like dating her, but she's been in it, for 25 or 30 years, like her whole career. She's come up through it. She's got leadership experience, at the senior leadership level. So she's really the person that we built it around. And then she's got a director of operations who's kind of her right hand. We've got a director of maintenance who's over the whole maintenance side. Then he's got a supervisor who's kind of coordinating day to day for the maintenance guys. And we've got, the maintenance guys that on that side. Director of operations is over, all of the property managers. We've centralized leasing. So we started it having really one person, because here's one of the things that's always bothered me about property management is like we expect property managers to be these jacks of all trades and to do everything. They got to sell, they got to do customer service, they got to understand they got to do all these things. But people are, usually only good at like one thing. Like the person that's going to be the hardcore salesperson, like you, Jake, is going to sell, anything to anybody is not going to be the same person that's going to want to have somebody sit in their office for an hour and talk their story and have that customer service tilt. So we brought in a great kind of front end salesperson to handle all new prospects and really nurture them and do that from the leasing side. Then we have another woman who's a little more soft spoken. Her name's Allison, who does a great job with renewals, delinquency, and just any resident issues that come up, right? So, but that's all centralized. Centralized. And then we've got
is one person able to handle all the leads?
Yes, they are, and we're definitely growing into that. But yeah, she is right now able to handle the leads. She's doing the leads for about 650 units.
And then is there an assistant manager that'll go out and do the tour, or how does that work?
Yeah, so there's still property managers, but the property managers And some of our smaller properties, we have kind of a pod, kind of like you guys do, right? We might have three smaller properties and like one manager. But the property managers, the intent was to make them really more financially focused and have them be more financial minded. So they really understand their financials. They really understand, how to move in a lie, and we take some of the other things off their plate so that they can really focus on the financials of the property. That's the intent of kind of how we've set this up. So and so in that way, we hired property managers that really had a financial acumen. Really understood had the ability to understand the financials of their property. You get some managers where they're like, whatever, they're doing it, but they don't really understand the financials, right? They don't really understand what moves the needle and put it together. So all of our people really understand that. And that was something we drilled into on the interview process as well. And so trying to just build a better mousetrap. I mean, I know there's a million ways to do it, but trying to leverage technology where we can.
I
I know
like the
it's
technology except for the virtual showings, because the virtual showings, or not the virtual, but the in like what do they
the
call it? It's
self-guided.
the self-guided, exactly. What I don't like in the data that we've tried to cut up on that, it's like they're like, we're going to get you 30% more leads with these self-guided tours. But then what you see is the conversion rate is dog shit, because the person goes and they look at it. If they have any questions, it's hard, to get it immediately answered. So it's like we, we've been tweaking like our booking system and things like that, but we still want the human there during business hours, to be able to show, because I think it's a better conversion rate once you have the lead, instead of burning through. Because it's great. Well, we can rack up leads, and we're selfguidedtours.com. We're going to show 8 bazillion, leads that came through, but our conversion is dog shit. That's what fears me, with that.
Yeah, I agree with you. I mean, we have self-guided tours on several properties. We don't get a lot of use out of them. I mean, like we don't get much traffic through the self-guided tours, but we have people on site. We have people on some properties based on where occupancy is. People on site on Saturdays. But I agree. There's that human touch is extremely important. I mean, you're never going to get like AI is never going to replace people on a property. I think you can do a lot of cool things with AI, like follow up on collections and delinquency and all that. But I
No, we
think that
want it. We want to use it
yeah,
everywhere that it's appropriate, and there's a pickup of some sort, whether efficiency pickup or financial pickup. I
for
just think
sure.
that's the self-guided is I've been skeptical. Yeah.
I agree. You're never going to beat somebody in person that can answer questions. And really, like there's an element of selling, right? It's like you're selling the people because it's going to help their lives to live there because you got a good property and you're going to take care of them. But you
Mhm.
just don't get that on a self-guided tour, right? You leave people to make their own assumptions.
Have you guys started building out any renovation teams, or is it just maintenance at this point?
It's just maintenance at this point. We still use some subcontractors for renovations, unless it's like easy turn things. But we don't have. I mean, it is a place I'd like to go. We don't have like an internal, just dedicated team for renovations.
Yeah. I think if you like the 30% pickup that you got from just that's the next step. It's something we've really enjoyed, and in the last year we've added siding teams and decking, and our properties are. I didn't realize. I think if we hadn't done it, there's so many decks that we've acquired over the years, and the return has been phenomenal between this, like siding and the decking, out of this world. Return, like, I love it. Absolutely love those two. Those are two of the ones we've added recently. So I wouldn't start there. I think the key, like in the beginning, is definitely making sure that you can handle your plumbing, making sure you can handle your HVAC, right? And then when you take over a property, you have teams that can blast through those turns for you, right? Similar that you did with the older community there. If you had your folks doing it, and look, we still, we had an in-house flooring for a minute, but we were able to kind of work on some pricing with vendors after we took that back, and then we were able to send it back to them where it made more sense to sub it out. So still sub out flooring, painting, and some of this stuff, but take in-house what makes sense too, right?
Yeah,
So
absolutely. Well, I love siding and decking is interesting. I wouldn't think you have enough volume to keep siding
Oh,
guys busy once you side
dude.
ahead.
And we're doing, we're doing everything that we go back with is at least like a 6x6 post on a elevated footer with Trex, right? And and those guys have more job security. It's insane. Well, because everything that we've acquired was built with wood. And I don't even and but also what we found is that since they're doing those, you'll get those mailboxes that are metal that cost an absolute fortune, and they open from the back, and the guy, I find a new one of those every day, and I have it on this hit list now. And what we've done is, the minute you have to replace those, you realize, holy shit, I never want to replace another one. So we're going through the entire portfolio and building these little, we'll call them dog houses over them to make sure that they don't rust and we never have to do them again. But it's shit like that, and the decking team does that, right? So that's part of their forte. And then and what happens is, in the wintertime, one of my pet peeves are breezeways with sheetrock. I absolutely despise it. It looks like shit. And so the decking team comes in and pairs up with the siding team in the winter. And any breezeways that we have that are not vinyl on the inside, they go in and they put in the house wrap, and they put the vinyl in, and they put the new PVC trim. And that's what they do for like their wintertime projects from, January to March. So it's great. It's phenomenal. And there's, and like you said, you can bounce teams around. Like if there's a huge siding job, the decking guys can go over and pitch in. But they have good job security. It's not even close. So
I like that. Well, there's always another level, and it's great talking to you
yeah.
guys to hear about what else you're doing. So yeah, absolutely.
Gino, take us home.
Couple takeaways from the show. Actually, I'll give you 3 takeaways. Our new moniker, our new slogan is the organic hippie and the Italian redneck. That's it. That's what we're going to be called from now on. That's the new slogan, okay? The organic
Ben and
hippie
Jerry.
and the Italian redneck. Yes. The second one is, make sure you go to the Cairo. Once you hit 40, it's time to go to the Cairo. Don't sleep on your side, okay? Sleep on your back. That's what Jake is saying. Yes. Breathe.
SC joints, open them suckers up, man. Those will kill you.
I think the third and final one for me is, getting into multifamily, getting into real estate. To us, the 3 of us, it's absolutely revolutionized. It's transformed our lives. Don't get into it because you think it's going to be easy, because you think it's going to be passive income. Get into it because the life that you have right now, you know that you could be doing a lot better. Kent knew that he didn't want to get on a plane after his first child was born and be traveling 50 weeks of the year. Jake didn't want to be hustling vaxes at doctor's offices. I didn't want to be working on Christmas Eve.
I don't want to be responsible for people's deaths and autism, all right? So.
Okay. Well, you didn't want that life. We didn't want that life. We're just saying, hey, there's another alternative. It's an amazing vehicle, but it's a difficult vehicle to learn. And I think Ken's transition from actually, joining mentorship programs, joining groups, starting multifamily, then getting into development and not having the ego to say, hey, I know how to do it myself. I'm going to invest in people to help me figure this whole building cycle out because it's really important. Those are some of the takeaways, Jake, that I've taken. Kent, where can the listeners get a hold of you? Where can they learn more about your podcast, about your businesses?
Yeah, if you guys go to ritteronrealestate.com, you can check out the podcast, learn more about me, and or you can check out hudsoninvesting.com is our kind of activation where we let people actually invest alongside us. So those are great places to check me out, and really appreciate you guys having me on the show today. This has been a lot of fun.
Awesome. All right, guys, as always, we believe in buying deals for the long term. Think in decades. I'm Jake. He is the Italian redneck, I guess, and we make it happen. We'll see you next time.
Thanks, guys.